Hello folks, this is Larry Strzelecki from Assured Concepts Group with an educational economic update for February 2019. Now in this month's video, I'm going to discuss some of the major headlines that influenced the markets in January. I'll also provide some insight into what these developments could mean for you as an investor. Now, January 2019 is behind us, and what a difference a month makes. By the end of 2018, the S&P 500, Dow, and NASDAQ posted their largest annual declines in years. In fact, the S&P 500 and Dow experienced their worst December results since 1931. Now, fast forward a month and momentum has swung in the opposite direction. The S&P 500 added 7.9%, the Dow was up 7.2%. These gains mean both indices had their best January performances in at least 30 years. The NASDAQ increased 9.2% last month, which was its best January since 2001. Now, these gains occurred despite the longest government shutdown in history, continuing for much of the month. Why did markets rebound in January? A few details helped change investor sentiment, including Federal Reserve comments and corporate earnings season. In December, concerns about how quickly the Fed was raising interest rates contributed to market declines. By January, however, Fed officials indicated several times that the central bank would also begin taking a more dovish view. The Fed also chose not to raise interest rates after its most recent session, saying it will be patient when deciding on future increases. Market confidence grew, knowing that the Fed isn't rushing to hike rates soon again. Now, corporate earnings season also largely affected stock performance. By January's end, about half of the S&P 500 had released their fourth quarter results. The data reinforced that corporate growth had slowed later in 2018, offering no new surprise. Instead of driving market losses, however, January earnings releases contributed to market growth. Why? This happened in part because a few solid reports from large companies helped ease investors' worries about a potential recession. In February, the remainder of corporate earnings season is ahead. Both global growth and the ongoing trade discussions between the U.S. and China may also remain on investors' minds. Further, we should receive some delayed data, which was postponed by the government's shutdown, including the first reading of fourth quarter gross domestic product growth. Now, in the weeks to come, we'll be monitoring these and other details, and we look forward to sharing new perspectives with you as they arise. That's it for this month's educational economic update. Please remember that nothing I talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give me a call at 847-426-1077, and I'd be happy to talk to you. Once again, this is Larry Strzelecki with Assured Concepts Group, signing off for the month of February 2019.
If you would like to discuss your portfolio or personal financial needs, please contact us at 847-426-1077. Nothing stated in this presentation should be considered an offer of a securities product nor an investment strategy. The advisors of Assured Concepts Group offer securities and investment advisory services through FSIC. FSIC is a member of FINRA and SIPC.